Well, the global economic kaleidoscope has moved. The US Federal Reserve has upped its inflation forecast, lowered its growth forecast for the US economy, giving a whiff of stagflation worries. But it has retained its forecast of 2 cuts in 2025. More important, I think, is Treasury Secretary Scott Bessent telling Fox News that his government will, on April 2nd, give a number to each country that represents their total tariff wall against the US. But it wasn't clear from that interview if the higher tariffs will be applicable, given that number, from April 2nd, or whether that number will form the starting point of negotiations. So what does all this mean for Asian economies, Indian economy, currencies, markets? I have an economist, Kuijs from S&P. He heads Asia economics. And a market veteran, Neeraj, Seth, former CIO and head of APAC fixed income at BlackRock. Neeraj and Louis, thank you very much indeed for joining me today. Louis, first to you. I'll come to the Fed in a bit, but what have you made of Scott Bessent's statement? Do you think reciprocal tariffs don't actually apply on April 2nd itself?
It's a good question. I'm not sure anybody of us knows exactly what they're planning in terms of timing, and not even exactly what they're doing, right? So the White House published a piece a few months ago saying that they consider there to be 7 or 8 criteria that they'll look at when they make up their minds about these reciprocal tariffs. They include tariffs, but also, bilateral trade surpluses, and even things they don't like about your tax regime, or things like when they feel your wages are too low. So we will have to look what they are coming up with and then make a decision. As you said, also, the timing is also not exactly clear.
But Louis, neither S&P, for that matter, yesterday Fitch even published its India growth number. They've retained it at 6.5, and I think your number is also 6.5. The tariffs are not making you revise India's growth numbers?
We actually looked very carefully at which Asian economies we think are most at risk of tariffs, and also where we think if tariffs are imposed, the impact will be the biggest. And, India still has sizable tariffs from a US perspective. So India may well face some tariffs, but exports to the US are not a huge size compared to India's economy, right? So the impact on growth is likely, to not be overwhelming. And that's why we think, yes, India may well see tariffs, but they don't necessarily completely run, of course, that trajectory for India that we're looking at.
Yeah, somebody, I think Citibank, calculated that it is only 2% of India's GDP, the exports to the US. Neeraj, the bigger point is, first of all, of course, thank you as well for joining us. What is your sense about US exceptionalism? If the Fed itself is lowering growth rate and upping inflation forecast, and we have seen the stock markets react, is US exceptionalism over?
I don't think it's over, but there's certainly a pause. And I do think markets were stretching the concept of US exceptionalism, which led to a lot of capital flowing to the US from a financial markets perspective at the expense of rest of the world. I do think you're seeing a pause now from a tech, from a future growth perspective. I still think US actually is very well placed, but the market stretched the valuations on the concept. And I do think we are just seeing a recalibration based on the shift in geopolitics, the shift in the US politics and the policy predictability. Because the one thing, I would say the only thing predictable today is the unpredictability of the US policy. And I don't think that's going away. So that pause is very well warranted.
Okay. So it's a pause. Maybe exceptionalism is tarnished a bit, but not over. But Neeraj, the bigger question really, which any Indian will ask you, when does the FII selling stop? I mean, I'm asking you also because India's inflation has come in much lower. So the need for the rupee to depreciate any further seems to have gone away. Given that side of the story, do you think we are at least at the end of this outflow from FPIs?
I think we've seen a decent chunk of what I would say what one would have expected. But if you step back and think of the three broad reasons, the valuation is a starting point. When you started to see the outflows last September, the Nifty was about 26,000, and we're seeing close to 28 billion of outflows from the FIIs. The second is the unpredictability post the US election and driven by tariffs and obviously the lack of direction at this point from an investor perspective. And the third factor is the rise of Chinese markets. And we've seen the push from the authorities to revive growth, and the run-up in the Chinese stocks have obviously taken some part of that allocation back. So I think we've seen majority of it, but are we done? I'm not sure, because the predictability as well as the potential for Chinese stocks to do well, at least in the near term, still very much is on the table.
Okay, I'm going to come back to you for a dollar rupee view as well, because the rupee has appreciated 1.7% from the February 10th lows of 87.97. Today it stands at 86.22. But I'll come back to that. Before that, I think another factor that we have to bring in is Europe. The deficit increase and the German Bundestag allowing for the debt break. The German executive is going to spend 1% more on defense. Louis, what does that mean for global growth? There is a huge fiscal stimulus from a large economy.
Yeah, Germany is still a pretty large economy. So our European economists, they're looking at this. We expect to have to raise our forecast for next year's growth and for 27. Not a lot for this year, because it takes a while before this starts to really, affect the economy. But definitely, we're looking at an impact on growth next year and the years thereafter. And it's about time, right? Because so far we've been looking at a really weak picture coming from Europe. So, there are probably, from a business, from an economist perspective, there are probably more productive ways to grow than via defense spending, but at least we have spending now at higher levels than we were looking at before. So yes, we are going to raise growth forecasts.
Okay, in terms of deltas, would you say that you would push the Chinese growth higher? I'm not at the moment looking at levels. I mean, it's not 4.5 or 4.75, but is it that India is seeing an outflow because the delta here is not moving to higher? But for China and for Europe, the delta is higher. Would that be a fair observation, Louis?
I think it's really interesting. There are a lot of things going on at the moment, right? One side is the economics, and then you have financial markets. And I think financial markets have rightly looked back at India, at China, and said, "Hold on." Some of us talked about it being uninvestable. There's nothing of interest over there. People realize there's a lot going on in China in terms of innovation in tech, biotech, all these things. To be honest, on the pure economic front, on the macroeconomic front, things haven't changed all that much. We're not overly bullish in terms of growth, and we still worry about downward pressure on prices. But yeah, the markets I think markets probably have been too gloomy on China and are having another look at it.
Okay. Yeah, fair point. I guess the property problem is still not over, according to latest reports from the country. You agree with that. Neeraj, now for the levels question. Your dollar rupee view, as well as interest rates. Do you think India becomes attractive on the rate front? Our last inflation number was 3.6. So, even in terms of debt, does India look very attractive?
I actually do believe India looks very attractive on the debt side. And if you look at the government bonds in India, they are among the most stable when you think about the carry to vol ratio. And it's still extremely underrepresented in the global portfolios because of the recent opening of the Indian debt market. So I do believe that's a market which remains attractive. It will be slow, but clearly a story of inflows from the global investors. And from a currency perspective, to your point, I think India is moving towards a structural story of shift in the inflation lower. And I think it's a positive story. So it should give stability from a currency perspective. And one of the challenges I always feel is people look back last 10 years, 20 years, 30 years and look at the depreciation, which was in a very, very different era. Lack of infrastructure, food price inflation, volatility. I think it's changing. So in a medium to long term, I'm positive on the currency exchange rate as well as the Indian government bonds and the broader credit markets in India.
Well, that's important. We were factoring in 3.1 or 3.3%. If I looked at the average of the last 20 years, you're saying that depreciation is not called for when you forecast. Louis,
it should go lower.
It should go lower. Okay, that's important. Louis, what is your delta on India's growth? I mean, there are some gloomy predictions that the GST collections, auto sales, etc. February exports, exports and imports shrank. Exports shrank 10%, imports shrank 16%. So is there any downside risk to India's growth?
The downside risks, Latha, I think there are also upside risks. So our forecast is pretty stable, both with regard to how it looked a year ago, and also, so basically it's pretty stable compared to last year, and also we're not planning to make major changes to our forecast. We think that, that there have been a few weak months in the second half of last year. It does look like we're overcoming that. So yeah, we don't want to make too big changes. Okay.
Well, thank you very much. I'm out of time, not out of questions. So Louis and Neeraj, thank you very much for participating in this conversation. I think the takeaways for India look positive at this point in time. The S&P economist saying the growth looks stable in spite of the kind of changes we are seeing in the global geopolitical terrain. And Neeraj saying that India is a long-term, macro story in terms of fixed income and inflation. And of course, therefore, the exchange rate. Those are positives, long-term positives. Wrap up on Bazaar on that note. Chartbusters coming up.